Good morning and welcome. We're at the start of another fresh week of trade. It's going to be an interesting one with the FOMC meets scheduled for midweek this week. So, Ankita, how are Qs looking though at the end of last week, at the start of this week?
Good morning to you, Harsh, and good morning to everyone. Well, Harsh, the global cues don't look very good. I mean, the nervousness in the markets regarding the banking and financial system is pretty apparent in the US and the European markets. Now, stocks fell on Friday as investors pulled back from positions in First Republic and other bank shares amid lingering concerns over the state of the US banking sector. Now, the Dow Jones Industrial Average lost 384 points. The S&P 500 slid 1%, while the Nasdaq Composite was down 0.7% in trade. Now, First Republic slid nearly 33% to end the week down close to 72%. Technology stocks were, of course, the beneficiaries of a tumultuous week for global markets. For the week, Dow booked back-to-back weekly losses as banking sector stress continues, and of course the Nasdaq Composite gained 4.4%, best week since January 13th. S&P 500 carved out a 1.4% weekly gain. Let's look at the European markets, and European stocks also rounded off a rather turbulent week with a negative session on Friday, despite announcements that Credit Suisse and the First Bank would receive financial help designated to prevent a crisis in the banking sector. The Pan-European Stock 600 index closed down 1.2%, DAX closed down 1.3%, FTSE was down by 1%, and CAC was down 1.4% in trade. So a negative handover coming in on Monday morning. Harsh, tell us where the crude is and how is the crude performing?
Well, yes, crude under pressure as well, Ankita. In fact, last week, of course, on the back of some pressure with regard to recessionary fears, as well as with regard to the manner in which banks have been behaving, there is a lot of negative sentiment, and crude is currently, Brent crude, as you can see on your screens, hovering around the 2021 lows. I'm going to try and give you all the exact numbers, but we're looking at Brent crude just below the $74 a barrel mark at the moment. So some pressure, in fact, not seen Brent crude below 80 this year. So clearly we can see pressure on crude at the moment. But that's where the highlight ends. Talk to us, Ankita, what should we look at going forward?
Right, Harsh. So there are a couple of events that we need to keep an eye out for. We have China's loan prime rates that will be coming out today. Back home, of course, we have Anand Rathi's board meeting that will be to consider the reappointment of Mr. Rakesh Rawal as the CEO for further 3 years, and plus they will be considering divestment of the shares held in Freedom Wealth Solutions Private Limited. And we have Dwarkesh Sugar's board meeting to consider the interim dividend for FY23, and we have Uday Shiv Kumar Infra IPO that will be opening for subscription as of today. Also, we have in other events, we have Japan's PM who will be on a two-way visit to India today. We have the MSME Ministry and the MEA who will be hosting the International SME Convention. And of course, we have the European Union foreign ministers and defense ministers who will be meeting in Brussels as of today. So these are the big events that we need to keep a track of, and we will be watching out for that. Harsh, take us through what the news is on the global arena.
Well, yes, straight off the bat, Credit Suisse, let's go straight to that. Relief for cash-strapped Credit Suisse after Swiss rival UBS announced it will take over the bank in a historic deal valued at $3.25 billion. Mind you, Ankita, $7 billion in terms of market cap at close on Friday. So that's a bit of a cut. The government said the deal involving Switzerland's biggest bank taking over the second largest was vital to prevent further economic turmoil across the globe.
And in another major blow to troubled lender First Republic, S&P Global has gone ahead and cut the bank's credit rating 3 notches to B+ from BB+. Warning of another downgrade is possible. S&P Global says that the recent $30 billion deposit infusion from 11 major banks of US may not be enough.
Well, and in more news flow from the ongoing banking crisis from the US, New York Community Bancorp subsidiary was entered into an agreement to purchase deposits and loans from Signature Bank, which shut down operations earlier this month. Regulator FDIC said the subsidiary will assume almost all deposits and loans and all 40 of the bank's former branches.
And amid turmoil in the US banking industry, the street is keenly awaiting the Fed's monetary policy meeting this week. While many believed that the Fed could pause on interest rate hikes, some believe that the quarter percentage hike could be on the cards. Experts say that Jerome Powell and other officials will want to signal that while they are attuned to the financial sector upheaval, it's important to continue the fight to bring down the inflation.
Well, yes, and moving on, the RBI Governor Shaktikanta Das spoke about the banking crisis in the United States and how it has highlighted the setbacks in the regulatory system. He adds that the RBI has made sure to fix some lapses and help the banking system stabilize back home. Listen in to what he had to say.
The recent developments in the United States banking system have brought to the fore the criticality of banking sector regulation and supervision. These are areas which have significant impact on preserving financial stability of every country. More specifically, these developments in the United States, especially over the last 1 week and thereafter, drive home the importance of ensuring prudent asset liability management, robust risk management and sustainable growth in liabilities and assets, undertaking periodic stress tests, and building up critical buffers for any unanticipated future stress. The Indian banking system continues to be resilient and stable. Now, the Reserve Bank has taken necessary steps in all these areas which I just mentioned. That is the area of risk management, stress doing stress tests, doing, focusing on asset liability issues.
And well, that was the RBI governor speaking optimistically of the resilient Indian banking system. And another optimistic views coming in from India's Economic Affairs Secretary Ajay Seth. Now, Seth said that, and I quote, India's macros remain strong in the face of an external shock as the collapse of 2 American lenders and the crisis unfolding at Credit Suisse assumes center stage. Also added that if the crisis becomes more pronounced, he does expect adverse impact on the capital flows. Allaying concerns over the risks to the Indian banking system from the crisis abroad, Seth said domestic banks are well capitalized and regulated.
Well, yes, and staying with some more central bank activity, China's People Bank of China announced late last week that they were lowering the amount of deposit banks and have set aside in a move to beef up growth in the world's second largest economy. As it did, the central bank has gone ahead and announced a reserve requirement ratio cut by 0.25%.
And Russian President Putin made a surprise visit to the occupied Ukrainian city of Maripol, inspecting reconstruction work and visiting the home of local residents. This is Putin's second visit to newly annexed territories. Maripol has been under Russia's control since 10 months now.
Right, and a deal to export millions of tons of grain from Ukraine through the Black Sea to Russia has been extended for at least 60 days now. Russia has warned it will not allow the deal to go on for longer unless sanctions against Moscow are softened.
And North Korean leader Kim Jong-un says the country should be ready to conduct nuclear attacks at any time to deter war, accusing the United States and South Korea of expanding joint military drills. Kim's remarks come as the country exercised nuclear drills.
Right, and with all of that activity happening around the globe, we'll slip into a very short break. More on the other side, of course.
Welcome back. Here watching Market Cafe with me, Ankita Saxena, and with me is Harsh Saida, of course. Let's quickly take you through the stellar lineup that we have for you on the market. At 8:05, we have Steve Bryce from Standard Chartered Bank on the global setup. At 9:20, we have Shailesh Bhan of Nippon India Mutual Funds on navigating through this volatility. At 9:40, we have Ravi Dharamshi of ValueQuest Investment Advisors on market movers. At 10 a.m., we have Rajesh Sharma of Capri Global Capital on navigating through the volatility. And at 10:20 a.m., we have Keshav Bhajanka of Century Plyboards India on the industry trends.
Right, a fun lineup for you going ahead, but the downtrend in the market is not likely to resolve quickly, according to Gautam Shah, who is the CMT founder and chief strategist at Goldilocks Premium Research. Listen in to his views on the outlook for the market.
Yesterday, you had a sort of a mini selling climax with the Nifty going close to 16,800, and from there we've seen a bounce. So I think whatever has happened is very normal. Even the Bank Nifty has reversed from the 38,500 level. And we've seen these bounces a few times in the last couple of months, and they've just acted as a trap. You know, people hope that it's a bottom, but it does not end up being a bottom because the markets go on to make a lower low. So I would remain bearish. The trajectory will remain down. It will be volatile. It's not going to be a linear decline because we live in a very dynamic world where too many things are happening on a daily basis. So you will see a lot of volatility, but the sequence of lower tops and lower bottoms will continue. So I think that the trend is clearly down. Pullback rallies should be sold into. This has been the stance for the last 2.5 months, and this remains. So do not get carried away with the uptake.
And well, before we take you through the rest of the news flow, let's quickly go across to the news for the hearing impaired. Welcome back. You're watching Market Cafe with me, Ankita Saxena, and with me is, of course, my co-anchor, Harsaida. Let's move on to news coming in on the domestic front now. The age-old soft drink Campa has returned to India in a new avatar, and it's none other than Mukesh Ambani, who leads Reliance, which is hoping to play on the nostalgia and legacy to revive the fizz. For one, distributors are already fretting. They are afraid that if Reliance pulls off a geo with Campa, it will start a pricing war, which will inevitably squeeze their margins. Now, for now, Coca-Cola has said that it has kept the same prices since last year for all the entry packs. Then, what's really worrying the distributors, and will the Campa quake shake things up in the soft drink market? My colleague Tamanna spoke with PM Ganesh Ram, chief patron of AIC DPF, and Harish Pajur, who's the brand guru and founder of Harish Pajur Consults, on the same. Let's take a look at what they had to say.
See, FMCG so far has not seen this type of price cut, 33% reduction.
It's an introductory offer. They've said it's an introductory offer.
No, they can give these offers in terms of for the traders, buy 3 get 1 free, like that, or buy 2 get 1 free, not reducing the MRP from 15 to 10.
It's a free market, no, Mr. Ganesh Ram?
On the name of free market, all this predatory pricing is getting into a lot of issues for the normal traders and the distributors fraternity.
Okay, so now so really this seems like a problem between you and the current dominant cola players. You're basically trying to tell them that no matter what they sell at, no matter what you sell at, you want to do a price war, you do it, you don't touch my margin. Am I understanding this correctly? So what have they told you? What have they told you about this?
Not yet. They have not given any announcement as far as we know. But they definitely need to take care of our margins directly or indirectly.
Okay. So this is clearly a preemptive strike by distributors. In advance, they are making their voice heard and, sending a strong message saying that if you want to do a price war, you do a price war. You want to increase margins, you do that. But do not at any cost reduce my margins. Now the question is, can they actually do that? Will they actually do that? So what is your next move, Mr. Ganesh Ram?
So we are planning to call for an all India meeting on this subject with our all state leaders joining it, and we will be taking a call and addressing to the Coca-Cola and Pepsi to ensure that the rupee-wise earning of the distributors are not affected at all.
Do you think that a price war is inevitable? I'm not going into the minutiae of who's cut prices and how much, because there was a report, then Cola denied it, they put out a statement, so I'm not going into that. But do you think price wars are inevitable, or will this be a further push on brand and marketing? Where will be the arena of this war?
Tamanam, I do believe price is going to be a very, very important element. And I pray that branding is also going to be an equally important element. On pricing, we must appreciate that it's not only the end consumer price that a bottle is sold at, whether it's 15 or 10, but it's these nitty-gritty pieces, the 200 ml versus the 250 ml, the returnable bottle versus the PET, because PET rules in this country. And the ability for Reliance to create a PET revolution, possibly in this space, lies big. And in addition to that, there is another weird item, not a weird item, it's a reality of the cola market, which is the crate deposit. Every retailer is meant to pay a crate deposit. So people will do N numbers of things, and pricing at the end of the day is what hits the market in two ways. One, what the consumer pays, and two, the turnover that an existing retailer gets from the colas he is handling. The moment his existing colas don't give him the kind of turnover and margin, then there is a worry. Margin is not a percentage, it's a whole number. And these folks, retailers and distributors, are looking for those whole numbers, which they've gotten used to.
Well, very interesting developments coming through. And sticking with the drink space, Bisleri International Chairman Ramesh Chauhan's daughter Jayanti Chauhan will be running the bottled water company now that Tata Consumer is no longer pursuing a buyout. Bisleri Chairman Ramesh Chauhan spoke to ET and stated that Jayanti will steer the company with the professional team headed by CEO Angelo George, and he no longer wants to sell the business anymore. Chauhan had earlier agreed to sell the brand to Tata Group for an estimated 7,000 crore rupees. Tata Consumer called off the deal with Bisleri, citing reasons as the company's indecisiveness. My colleague Aishwarya Patil spoke with the CEO of Bisleri, Angelo George, to understand their business outlook, succession plans, and what the cola wars mean for Bisleri.
I would say we have doubled our growth rates. Now, there are two things we had done during the pandemic, at the end of the pandemic. We had put together a 4-year vision plan, where during the pandemic, there was a lot of learning in terms of going into every minute item to conserve cost in those days. But we also discovered that there's a lot of potential in process efficiency improvement and overall efficiency improvement itself. Yeah. And we also discovered what could be the future challenges that are going to come in terms of water availability, in terms of regulatory constraints, in terms of other things. And we said as an organization, we need to kind of prepare ourselves. So we set out a plan where we said in 4 years, we would want to more than double where we are from pre-pandemic levels. During the pandemic, there was a minor dip in sales. And that is rolling as we speak. We are going to end the first year of the vision period in the next 14 days. And we are running ahead of our plans. So the capacity...
What was your target?
Double in 4 years. And we are running ahead of that.
So could you break it down for us, because your portfolio has packaged drinking water, there's carbonated water, there's also, like you said, the jars, the larger jars. So in that sense, could you break it down for us, which part of the business has the most amount of contribution from
I would say water itself is our largest chunk of business. Others are sub 10% at this point in time. So one of the objectives during this entire vision period is to get that sub 10% segment, which is both Vedika and the carbonated beverages, about 10% contribution to the business, number one. Number two, also we see
so your packaged drinking water makes for about 80 to 90%.
90% of the business today. Okay, but as we go forward, we would want the other segment to start contributing big in terms of volumes. Even within packaged drinking water, we have identified potential SKUs, which could be runaway winners. And there are some experiments we are doing with SKU sizes. And there have been dramatic learnings for us, for a 50-year-old company, that you put your heart and soul behind a particular SKU and drive it hard, it can just exponentially grow. So we see that as well, and we are targeting specific channels, specific consumption occasions, and driving it hard.
Right. We just want to touch upon different SKUs like you mentioned. Which one is the most high-selling one, and also as the CEO of the company, which product is your favorite?
I mean, it's almost like asking a father which child is your favorite. All SKUs are my favorite.
Right.
Because I believe that every SKU or every brand in our portfolio has a specific role to play. And there is a consumer reason for that SKU to exist. So I need to cater to
So
the
which
consumer.
one's doing the best?
The largest volume is obviously the 1 liter pack.
1 liter pack.
Which is the universal pack in many sense. In terms
In
of
your
everything.
tenure, how much has it grown, would you say?
I wouldn't
From those
like
levels.
to disclose 50% more than the previous growths.
Oh, that's great. That's great. Speaking of, the carbonated business right now, Campa Cola has been introduced in the market, and the Bisleri carbonated business is, like you said, sub 10% of the overall portfolio. How do you see it growing? And I'm sure you want better penetration in terms of cold drinks being sold in the market for Bisleri. How do you see it growing henceforth, and what's the strategy like? And there's this sort of price war that we can see right now in the market. How are you going to compete with these sort of options available?
We have actually been incubating this category for the last few years.
Yes.
So we've been playing around with price points to understand what price points are relevant, and will give you that penetration level. So we got pack sizes at starting at 10 rupee price point onwards, which I think is critical in a market like India, where you require penetration to happen and sampling to happen. So that's going to be a very large chunk of business by itself. So I think more players coming into the category, more noise is nice, because category will start growing, and that's what it has done to the brands and the categories.
Well, moving on the sidelines of the Value Quest Inflection event, Ajay Piramal, who's the chairman of Piramal Group, said that India remains resilient despite global crisis and will continue to emerge stronger. Listen in to what he had to say.
If we go by what Morgan Stanley says and what many others are saying, in the next 4 years, our economy will be the third largest after the US and China, and ahead of Germany as well as Japan. So that is in some ways the strength of the Indian economy. When FIIs were exiting last year, you all are there, you are the ones who invested in the Indian markets and gave confidence. The collapse, or not collapse, but the crisis of Credit Suisse has not had any impact, I think, on India. Whether it is the Hindenburg report, where people said, what's happening to governance, what's happening to the Indian markets, it's not transparent, etc., etc. It's still, the markets have taken that in their stride and gone ahead. And we always talk a lot about how regulation in India is very lax and how there's crony capitalism, etc., etc. But just think of it. $210 billion is the deposits of SVB Bank. And what has the Fed done? They have guaranteed that everybody gets it. So all the errors which have been made by the bank are being subsidized by the Fed. Similarly, in Credit Suisse, overnight, 40 billion has been given by the Swiss authorities. Again, it is somebody else's fault, but the people are bearing the cost. And therefore, very often when we are critical of our country, do recognize that there are others who do this in a much bigger way.
Well, interesting words there coming from Ajay Piramal, but with that, we'll slip into a very short break. More, of course, on the other side. We'll go stock specific. Welcome back. You're watching Market Cafe on ET Now. I'm Harsh Saita. With me is Ankita Saxena. Let me quickly take it to Vamakshi, who's got a list of stocks with us. Vamakshi, take us through all the stocks that are in news today.
Well, absolutely. Let's first start off with delivery. We have fun action happening over here. Vanguard bought 96 lakh shares worth nearly 310 crores, and the sellers include Integrated Core Strategies as well as the Internet Fund. Equitas Small Finance Bank also in focus on the back of the same reason. We are seeing that Norges Bank has bought 87.7 lakh shares while Vanguard has bought 57 lakh shares. Integrated Core Strategies sold nearly 66.4 lakh shares at 68 per share. Jindal Stainless also on the back of the same reason. Norges Bank bought 28 lakh shares while the seller is Integrated Core Strategies. Havells will also be on our radar. Now the company has started commercial production of air condition at its Sri City plant in Andhra Pradesh. Navin Fluorine will also be on our radar as the company is going to add 2 times its existing hydrofluoric acid capacity. In fact, the total capex for this is around 450 crores and new 4,000 tons per annum hydrofluoric acid capacity will be brought ahead at the Dahej. Now the funding will be from a mix of internal debts as well as accruals. Now we have Jindal Poly in focus as well. The company has commissioned capacity expansion of global non-woven division at the Nashik plant, and the capacity has now expanded by 61% to 58,000 metric tons. RVNL in focus on as it has been declared as the L1 bidder for railways project worth nearly 1,088 crores. Cochin Shipyard is also on our radar as it has received vessel construction order for nearly 550 crores. SJVN in focus also on the back of an order win coming in. Now they have won 1,000 crores worth of order to build solar power project for MSEDCL. Canfin Homes also on our radar as Suresh Srinivasan Iyer has been appointed as the MD and CEO for the company. Now he has spent more than 25 years in various leadership roles at Group Finance. And lastly, we will be watching out for Godavari Power. The company will be buying 50 lakh shares at a price of 500, which is coming at 28% premium to the current market price. The total buyback happens to be at 250 crores.
All right, thank you so much for that, Vamakshi. And then we'll move on. GMR Infra will merge its subsidiary GMR Airports with itself. The merger expects to be completed by FY24. My colleague Somit joins in with more details. Over to you, Somit.
Well, there are a couple of announcements that have come in GMR Airports Infra. The first one is the merger announcement where GMR Airports, which is currently a subsidiary of GMR Airports Infra, will be merged with the company. Now, GMR Airports is the airports platform company, and GMR Infra owned around 51% stake in this, while the remaining 49% was owned by Group ADP, which is the entity which owns airports in Paris. Now, this merger is expected to get completed by the end of FY24, that is the next financial year. And post-merger, if you see, Group ADP is expected to own a close to 32.3% stake in GMR Airports Infra, which is the listed entity, and Group ADP will be listed as a promoter entity in this company. Along with this, GMR Airports Infra is also looking to raise close to 2,900 crore rupees via FCCBs, that is foreign currency convertible bonds, and these bonds will be again issued to Group ADP. The tenure of these bonds will be around 10 years and 1 day, and this will bear an interest of around 6.76. Now, this will bring down the overall cost of borrowing for GMR Airports Infra, because the current cost of borrowing is at 9%, and this is what the company is getting at 6.76. Also, these bonds will be converted into equity shares after 10 years at a price of around 43.67. But how many shares will be issued, that is still not decided by the company. Now, why the company is doing this merger? Firstly, to simplify the structure, because currently GMR Airports owns 51% stake in GMR Airports Limited, which owns the airport assets. So this will bring the airport assets directly into the listed company, and this will also elevate Group ADP to the listed company, and they'll get the shares of the listed entity. Now, along with this, the company will also be able to repay some of its debt and contingent liability. The debt repayment will be debt repayment could be to the tune of around 2,500 crore rupees, because the company will be getting 2,900 crore via bonds, and also they will get separately 550 crore rupees from Group ADP based on the earnouts that they had decided back then in 2020. Now, the approvals that the company would be required for this merger to go through will be from stock exchanges, SEBI, NCLT, and this merger is expected to complete by FY24, and the company will also be holding a conference call today at 11:30 a.m. to give us more details on the same, so keep an eye out for the stock.
Well, thanks so much for that, Somit. We'll quickly move on to Vamakshi, who's again standing by. Vamakshi, talk to us about all the brokerage notes you've been going through, especially the important ones.
Well, absolutely. Let's first start off with DLF. We have a note that has come in from JP Morgan, and what they're highlighting is that DLF has announced the sale of its most important launch of FY23. They're expecting gradual sales over the next 3 years, with nearly 30 to 40% sales coming in at the launch of the company. The company has said that 95% of the buyers are individual end users, and with this launch, they believe that the company is expected to regain its long lost slot. So, in fact, JP Morgan is highlighting that DLF is the top overweight in the real estate space. So, given all those factors, JP Morgan has given a target price of 490 per share. Where we also have Godrej Consumer on our radar. Goldman Sachs believes that the turnaround is likely to gather momentum as the reset phase is now behind us. HI segment is expected to see growth via potential innovations. Hair colors, air care, liquid detergents are also likely to boost the baseline in their opinion. International businesses are also poised for a recovery in their opinion, and on the back of all those factors, GCPL is in fact Goldman Sachs' top pick in the Indian consumer space, which is why they've maintained a buy rating, target price of 1,100 per share. And lastly, watch out for Zydus Life Sciences. We have a note that has come in from Axis Capital, and they've highlighted that the US is expected to see launches, and that in turn could improve growth visibility going ahead. India is expected to see steady growth visibility, and the R&D assets that the company has developed is expected to drive long-term growth. So on the back of that, Axis Capital has maintained a buy rating, target price of 560 per share.
For that, Vamakshi, let's quickly move on. Indian Bank actually met with the management of, the management of Indian Bank met with MK, and what they've suggested is they're guiding for a growth of 13 to 14%. That's the credit growth they're guiding for in FY23, which is lower than the system. 15 to 16% is what the system is growing at, and what the management suggests is they want to focus on higher margins. So they're shifting their focus more towards margins, more towards efficiency. That's what the management is currently guiding for. CASA, they believe, is coming under pressure due to cannibalization. Two reasons for that: cannibalization and move of the current and savings account towards TDs, as well as competition from alternate investments. NPA ratios are expected to trend lower. With regard to the CASA, one more point that the management spoke about is they're trying to refresh and renew their CASA strategy going forward. So that's something that one has to look out for as to how that plays out into FY24. The other piece is they are looking at reducing their NPAs, and NPAs are already trending down. They believe that relapse from the restructured book is going to be lower going forward. Agri slippages remain volatile, but management believes that recovery rates is far better now. And they believe that the bank will be one of the key beneficiaries from the resolution of accounts like Shri and ILFS. So we need to look out as to what kind of recoveries happen on that particular front. But largely positive with regard to the commentary coming in from Indian Bank.
All right, Harsh, we will stick to the banking sector. Punita Kumar Sinha, Managing Partner, Pacific Paradigm Advisors, believes that the valuations for the banking sector is becoming more attractive. Listen in to what she had to say.
We've had some serious dislocation, particularly in the US regional banks and the banking sector. Even the systemically important banks have seen their share prices completely collapse. And that might continue for some more time. But I think if the stock prices come down further, I also expect that, as Devina said, that the Fed may change its policy stance from being very tight on liquidity and on interest rates to being more back to a little bit more of an easier stance, and we may not see rate hikes, which markets might like. So if markets collapse further in terms of stock prices, particularly of the banking sector, and the valuations will become a little bit more attractive, and then markets will start looking ahead, potentially if the Fed rate hikes stall. So there could be, while it's going to be a very volatile environment, there will be trading opportunities, I think, in this environment to make money.
Well, moving quickly on, Rahul Bhasin, who is the managing partner at Bearing Private Equity Partners, believes that Indian banks are much better placed than the global ones due to a variety of reasons. Listen into what these reasons are. Of course, very interesting inflection point with regard to banks.
I think the Indian banking system is actually in a much better place than the rest of the world, and I think that's because we've been through a crisis. We've been through, the bad loan exposure, the balance sheets, and the equity base of a lot of the public sector banks being wiped out, therefore constraining credit growth, therefore constraining GDP growth. We've been through this cycle. We've come out of it. We're at that point in the cycle where a lot of the bad loans have been washed out, and we are actually sort of on a good runway going ahead.
And well, there is scope for gold and silver to notch more gains. That's the word coming in from Gautam Shah, who's the CMT, founder and chief strategist of Goldilocks Premium Research. Listen in to our slice of this conversation.
I think the beauty about gold is that anything happens in the world, on the negative side, gold is the first to go up. And we've just had too many developments in the last 1.5 years, or rather since the COVID times. And with this development around SVB, we've seen this $100 move on gold. It's already at 1915, 1920. I think it will get past 1970 in the near term and eventually move past lifetime highs of 2017. So there is 7, 8, maybe even 10% upside on gold and about 15 to 17% upside on silver. And we strongly recommend topping up on both these precious metals at current prices and on any small decline.
Right, and let's move on. Rajesh Kothari, CIO at Alf Accurate Advisors, is bullish on capital goods, banks. However, he's avoiding pharma. He's underweight on IT as well. Listen into his views.
On a macro level, I can tell you we have been bullish on capital goods as a theme, and that is working very well. Banking is another theme on which we are positive. Of course, you need to be very, very selective when you buy the banking stocks. Pharma, we have been avoiding almost from last 2.5 years, post October 2020 on lockdown of COVID. We are avoiding pharma. IT is the one sector which we have been underweight since last about 12 months, and our view remains the same. So broadly, these are the basically, our sectoral call from the portfolio perspective.
And well, we have a Dincha Irani, CIO of Helios India, who likes private sector banks, and is picking out a few names for his portfolio. Listen in to what his choices are.
The problem that US went through, the banks went through, it was quite ironical, right? Because 2007-8 was brought on by aggressive lending to the housing sector, which actually the bubble burst and things went downhill for them. But in this case, it was because of buying government bonds, right? So it was obvious there is not a crisis we're talking about. At the most, a Fed could have very well come back and said that, okay, guys, I will lend you the money on the face value of the bonds as such, because he's the guy who's issuing it, right? So, and that actually happened, and that's why the world is back to where it was earlier. And actually, you're right, because we did realize this, and frankly, I mean, we never panicked. We did pick out a few names. I mean, not names, rather we didn't add any new names, by the way. We've been in search for a few names, but we did add to our existing positions and they were cashed out. And in fact, we were in cash to an extent, and we started deploying that cash to that much. So basically the panic was in banks, nothing to do with US, and certainly you saw a lot of correction in the banks in India per se. So obviously we love our private sector banks, and so we picked up a few names there.
Right, that was Dincha Irani, of course. We'll quickly move on. Let's quickly take you through what Asian markets are up to. The US markets, of course, closed well in the red, 1% plus in the red, and Ankita did take you through all of that. But Asian markets are not doing any better. You're looking at the SGX Nifty on your screen, down around 0.5% as we speak, 100 points roughly in the decline at the start, at least that's the anticipation. But the Asian markets largely in the same basket. We're looking at the ASX 200, which is down around 2/3%. The Kospi on your screen is down around 1/4%. We're seeing cuts even on the Hang Seng, down over 1.5% in early trade. So you're seeing pressure there as well. And we're seeing the Nikkei, which is down 2/3% as well. So we're seeing cuts across the board, 3/4%, in fact, lower the Japanese index. So we're seeing cuts across the board, at least at the moment, and we're seeing a lower start for our own Nifty index as well.
All right, those were the Asian markets for you. A negative start for us, perhaps. Moving on, a president of Ecuador, Guillermo Lasso, expressed solidarity to his nation dealing in the aftermath of a major earthquake. The quake on Saturday killed at least 15 people. The US Geological Survey reported an earthquake with a magnitude of about 6.8 that was centered just off the Pacific coast. And national capital Delhi braces for heavy rains as the IMD has issued an orange alert from today. IMD predicts heavy rains in the city coupled with dusty winds of up to 40 kilometers per hour along with hail in some areas.
Right, and Japanese Prime Minister Fumio Kishida is set to arrive in India for a 2-day trip. The leader's visit to the national capital is seen as a great opportunity to review the bilateral ties between the two countries. Well, and India has lost the second one-day international against Australia in Visakhapatnam, and how they've leveled the series, the 3-match series 1-1 ahead of the final fixture in Chennai, which is scheduled for the 22nd of March.
And well, with that, we're completely out of time on this one. Thank you so much for tuning in. The market will take the action forward.